We have a methodology to take into account developments, and the level of scrutiny is high, whether it is completely legislated or so certain in its outcome that we can actually take it into our exercise and the analysis that we do. When we are not too sure, we constantly do some scenario analysis to assess and estimate what the impact would be of such or such other decisions. And that exercise will be intense in the next few weeks and will, give rise to some very serious results at our June projection meeting. As I said, thanks to the, consolidated exercise between NCBs and ECBs. But currently, if you ask me about the countermeasures, they are not included in the sort of baseline that we have. And obviously, we look at the entire trade balance. We look at goods, we look at services. This is pretty obvious to anyone. We cannot look only at goods or only at services. So I do pay attention to services, but I look at goods as well. The two are intrinsically the outcome of the economy and the trade movements that we have with other parts of the world. So I look at both. I think each central bank in the world does its job in good conscience on the basis of its mandate and on the basis of the currency that it is in charge of and the territory in which it has competence. So that leads us to look at the euro area, not in isolated form, because we are open to the rest of the world and more open than many other economies, including the United States for that matter. But we look at that, we are focused on the euro and we are focused on our price stability mandate. The other central banks in the world have different mandate. They have a dual mandate for some of them, and clearly the macroeconomic situation is different, and they will be on the receiving end of a different nature of shocks from the shocks that we will be receiving. So that leads us necessarily to drawing different conclusions. It is a different situation. Thank you.